Welcome back everyone to the Moneycontrol live stream. You're watching markets with Santo and CJ. Well, it looks like we are going to have a muted end to the Diwali week, which had started off with patakas, by the way, on the Mora trading day. If you look at the Nifty and Sensex, at this point of time, exhibiting modest gains, despite the fall that we have seen in European stocks at this point of time. The small and mid-cap space is actually the one which is taking a heavy toll at this point of time. Very hefty profit booking in that space. And banks, metals, pharma, these are the major sectors that have been dragging the index towards the flat line, while RIL, which has surged in the past 1 hour, actually helping the index at this point of time stay in the green territory. Santo.
Well, CJ, I think if he had his way, probably every day would be a bullish close.
Absolutely. I think that is millions and millions of investors who would want to have that. It's just not
markets just don't work that way, CJ. You should understand that. Well, that said, I think very clearly the Nifty seems to be struggling in the absence of buying support at higher levels. 18,000 is the mark that everyone will be looking forward to very eagerly, because twice in the past, the index, twice in the last 6 months, that is, the index has been unable to sustain above 18,200. So this is something that market will be closely watching for. And that said, in key data points, there's been a build-up of long positions in the futures of Honeywell Automation, and seems like the market is not very happy with the latest quarterly numbers from SBI Cards and Tata Chemicals. We're seeing build-up of short positions in the futures of both those stocks, as well as NMDC, which has been seeing a build-up in short position for the second day running.
Clearly, Santo, I think at this point of time, it seems like the market is still very, very indecisive. It's still struggling to figure out as to which direction should it head, because if you look at global cues also this week, I think they were not that supportive, barring the first 2 trading days of the week. We have seen US markets also edge lower the past 2 sessions. European markets today started off on a very weak note after a very surprisingly strong inflation data that came out in Germany. Even the German GDP data for the third quarter came in ahead of market expectation, which basically means that the European Central Bank will be forced to raise interest rates at a much faster pace going ahead, even though there are fears of a recession in that economy.
Well, CJ, you know, already the market is talking about the pivot, the so-called pivot by the central banks, but they forget that first the effect of the rate hikes have to, show up, right?
Yes, exactly.
And they will start showing up at some point in time.
Absolutely,
See, already the increase in home loan rates, now it's only going to get worse, because we are seeing at least another 50 basis points of hike from the RBI. So that said, we are still going to see some pain in the short term.
I think Santo, but it is not, I just don't think central banks can do anything with this inflation, because this is not inflation that is driven by, say, stupendous demand in every segment of the economy. I think this is inflation that has largely been triggered by energy prices. The inflation that we saw pre-March was one that was driven by demand in the West because of the fiscal stimulus that all of these economies had given. But post-March, I think a lot of this inflation has been driven by energy prices, and energy prices at this point of time are not showing any signs of cooling off anytime soon.
Yeah, CJ, there's been this long-standing debate whether rate hikes are in fact any good when it comes to controlling inflation, which depends on so many factors. And I spoke to a lot of people in the market, and some of them said an interesting thing. It's not that policymakers believe that higher rates will help curb inflation. At the margins, they may have some impact, but then the dilemma is that policymakers can't said to be sitting there doing nothing. They need to
be seen doing things. Yeah, right, exactly.
So even if it doesn't happen, I mean, they just can't tell the people, look, this is the way it is, and we can do nothing about it.
I mean, what will central bankers do if they don't, come and say that they don't really have any control over policy? They will have to lose their job probably.
But some relief for the savers, I would say, all said and done, at least what they get on their savings bank deposits.
Fixed deposits and saving deposit rates have been inching higher. That said, of course, there were a lot of individual stocks that were buzzing in trade, starting off with Santo's every Friday pick, which from the brewery sector or the beverage sector, that is.
I don't know if it's intentional or
I think it's subconscious, Santo. It's just basically you're preparing yourself for the evening.
So United Breweries is the first stock on our watch list. Now, decent set of numbers there. Q2 margins and net profit were slightly ahead of analyst estimates. Now, what has really helped is better cost management, and also the fact that we are seeing a slight softening of the key raw material prices, mainly barley, and that has also helped. But at this point, the street is still divided on whether this is the right entry point given the valuation, which has always been high. The stock has not done much throughout this year, but it's managed to stay in a tight range despite all those concerns over an inflationary environment being bad for even alcohol companies. Anand Rathi is of the view that the stock is quite expensive at this point in time, and says that it will rather wait for a better entry point, and so it has a hold rating on the stock.
I think, Santo, even if you look at the technical charts as well, I think there also it seems like the stock is largely in a downward momentum at this point of time. So therefore, any sort of upside at this point of time appears to be limited, in my opinion, because if you look at one of the key indicators for short-term momentum in a stock, which is the 50-day moving average, the stock recently just moved below that 50-day moving average, although it is above a long-term moving average of the 200-day moving DMA, that is. But because of moving below the 50 DMA, I think that is a suggestive that at this point of time momentum appears to be quite weak, and therefore it will not be surprising if the stock sees more selling pressure in the coming days or weeks or even months going ahead.
Good volume growth though in the second quarter for United Breweries. Volumes were up 23%, with the prestige and above brands showing a growth of almost 48%.
Yeah, with all the youngsters, hopping on to Goa shacks and bars, of course, I think volumes are always going to do well in the September quarter. But what will be important, Santo, is whether this pent-up demand sustains or not, because alcohol or beverage companies have benefited a lot from the reopening of the economy or the reopening of offices. But I think going ahead, whether this momentum sustains or not, that will be the key question facing a lot of these companies.
Well, one thing about alcohol, A, it doesn't age, and B, I think there's never something like pent-up demand.
Come on, there are always some sort of pent-up demand, That said, well, the first stock on my radar today is from the chemical space. I'll be talking about two stocks from that space, but the first one is Anupam Rasayan. And now if you look at the stock, it has shown a lot of resilience today in trading, despite what appeared to be very flattish or inline earnings from the company. The company did see compression in its gross margins and operating margins in the second quarter, but according to a lot of analysts, that was largely in line with what the market was expecting, and therefore any sort of weakness at this point of time in the second quarter that was exhibited is largely factored into the price. But the most important thing, Santo, is that the company recently has raised money from a lot of institutional investors, and the large chunk of that money is expected to go towards funding its capex plans, and therefore Jefferies is of the belief that these proceeds will be funding growth over the next 4 years for Anupam Rasayan. Apart from that, the brokerage house is expecting 27% earnings CAGR over the next 5 years. Remind you, not 2 years or 3 years, over the next 5 years till FY27. So clearly, one stock to really watch out for, especially after the fundraise that they have done for their capex plans.
Well, a decent set of second quarter numbers there, and can't really argue about that, and company has still managed to maintain margin somehow. The fall is not as steep as was feared. However, if you look at the quarterly numbers for the last 3 quarters in a row almost, it's been moving in a certain range, which now the market seems to have already priced it at current levels. So probably they are waiting for some kind of a breakout. Specialty chemicals is something which most people, most investors in the market are still positive on, but at the same time probably they also need to see that the growth momentum is sustaining, and unless that happens, probably we could still see the stock move in a narrow range, CJ.
Well, by the way, guys, if you have any questions, if you have any thoughts, if you have any commentary, you can always use the comment section and utilize the hashtag AskMC and post your comments in there, and we will try to take them up, if not today, then in the coming shows. Santo, moving on.
Yes, Torrent Pharma is the next stock on our watch list. Now, stock is quoting close to 52-week high, and the second quarter numbers were fairly decent, and according to the company management, there is room for improvement in the margins by another 75 basis points over the next couple of quarters. The margins for the second quarter was around 29%, and the management is confident that this can be sustained for the next couple of quarters at the very least. Now, the India business for Torrent Pharma has been pretty robust, almost 13% growth, and that's been the main kicker. But at the same time, according to Elara Securities, the company is facing a lot of challenges as far as its international operation goes. And while the numbers from Brazil for this quarter were pretty good, it's been feeling the heat of competition out there and had to cut prices of some of its key products. Elara is not very bullish on the German operations either, and sees sales remaining flat for the next couple of years. And the Indrad plant of Torrent Pharma, that's been re-inspected by the US FDA once again. Now, about 19 products which have been filed, they have been from this plant, and so they are yet to get approval at this point in time. And according to Elara, the outlook for the US side of the business doesn't look all that rosy either, and the brokerage expects at least a 3% decline in sales from its US business over the next 2 years. So, all in all, Elara is negative on the stock and has downgraded it to a sell.
I think, Santo, for Torrent Pharma, the India business and the Latin American business hold the key at this point of time. The India business has been doing quite well, and as you mentioned, there are concerns about the Brazilian operations because of rising competitive level. But at this point of time, because of the greater brand pull that Torrent Pharma enjoys, I think the India business and the Brazilian business will continue to do well, and it will boost revenues there, and therefore the overall consolidated revenues of the company. Apart from that, the recent acquisition that we have seen of Curatio, I think that is expected to be very, very synergistic in the opinion of ICICI Securities. They believe that even though in the near term it will dilute the company's earnings per share, basically pull it lower, but eventually once the integration is complete, you will see a very, very nice uptick as far as earnings per share is concerned in terms of the contribution that Curatio can make towards Torrent Pharma's earnings. So therefore, I think I would not be too pessimistic at this point of time. There is a reason why the market is getting behind the company at this juncture, and probably it will continue in the coming quarters as well.
Well, but certainly the stock has been one of the best performers.
Yeah, I mean recently, I mean it was not so long ago that Torrent Pharma actually nobody wanted to touch it. It was not. I mean, if you remember last year, this was one of the most derided stocks probably in the pharma pack, but clearly the management has started to get its act right, and I think market is also being appreciative of that fact. Well, the last stock on my radar today is Finolex Industries. Now, the company's earnings were not really much to write home about. If you look at the numbers overall, a very weak set coming in for the September quarter, but I think if you look at the price action as well, that seems to be factored in, by and large. Overall, the margin profile was very, very weak, and that was largely because of the fact that PVC prices, or PVC resin prices in particular, fell almost 20 to 30% on a quarter-on-quarter basis in the September quarter. Now, the management's opinion is that PVC resin prices have bottomed out. It is very, very unlikely that they will continue the slump that they have seen in the September quarter, and therefore there is a very, very high rate or high probability that PVC resin prices will start inching higher in the second half of FY23, and that is where the management is coming from. They also believe that because PVC pipe prices have also gone down because of the fall in PVC resin prices, volumes in PVC pipes as well will surge in the second quarter. Also, with the construction season coming back, I think that will also aid demand for PVC pipes, Santo, going ahead, and therefore this is the reason why ICICI Securities has retained its buy call on the stock, as it does not believe that the current weakness that we have seen in the second quarter will in any way or form affect the FY22 or FY24 FY24 earnings expectation that the brokerage has from the company.
Well, I was just looking at the price chart of Finolex Industries, and sometimes it's so strange, CJ. If you had invested in the stock, let's say about 5 or 6 years back, then you've not really made any decent returns, worth speaking, at least for the kind of heartburn that's caused. But if you have been holding the stock for 10 years, then probably you're lucky. It's made good money for you. It's been almost like a 5 to 6 bagger.
Not bad.
Which is a pretty decent return. But coming to the latest set of numbers, CJ, now the top line for the second quarter is the lowest in 8 quarters.
Yeah,
that's really, really low. In fact, it has been dipping for the last 3 quarters in a row now. That's clearly one area of concern. And if you look at the stock price movement, that tends to reflect market skepticism somewhat. The stock is still a good 40% of its highs, which it had touched sometime in November last year. So at this point, at least the price seems to show that there is a lot of skepticism whether the company will be able to bring its earnings back to those levels seen in the recent past. That's at least 2 or 3 quarters back, and which I think can be seen from the stock price again, that market doesn't seem to believe that's possible.
Yeah, Santo, I think a major reason why the top line has been falling for the past 3 quarters is because product prices themselves were falling quite sharply for the company. I think that was largely because of the high supply of PVC resins that we have seen globally also, and with now expectation with being that prices there have bottomed out, I think there is a belief within the management, at least, even though the market does not believe it yet or so far, within the management the belief is that prices have bottomed out, and therefore we should start seeing uptick in profitability in the second half of FY23.
Well, and the last stock on our watch list this afternoon, Maruti Suzuki. The company just reported its second quarter numbers a short while ago, and margins as well as net profit has been ahead of what most analysts were expecting. The easing of raw material and also the weak yen to a large extent has helped, but most importantly, CJ, the order book position of Maruti is pretty robust at a little over 4 lakh vehicles, and most important, 1.3 lakh of those are pre-bookings for its new launches. So, that shows demonstrated confidence in Maruti's products. And remember, when you had seen that big bull run in the stock back in 2016, it was on the back of product launches, and since then for a long time the company did not launch any new products, which was again which in turn put pressure on the stock prices, and now once again that cycle is set to change. Now, don't tell me again your favorite theory that for prices to sustain at these level, every single car buyer in this country has to be a Maruti.
No, that is true. That is still true. I think since the time I did mention that, I don't think the stock prices have corrected much. Also, I would not read too much into pending orders and pre-booking orders, Santo. I think those are generally good numbers to always tell the market that we are getting demand for, but ultimately what matters is what is the delivery numbers that you're going to make, and therefore I think markets should not read too much into pending orders.
But look at Maruti's credibility overall, CJ.
I get that. I think that it is not only that Maruti does that. I think every company, every automobile company under the sun would always do these sort of numbers, and these are always numbers that you always see when stock performance is doing well or the market is very benign towards you. But I think you would have to take that with a pinch of salt to not extrapolate it to thinking that okay, this is the amount of the cars that the company is going to deliver come the end of this quarter. That said, I think if you look at the Q2 numbers in isolation, a large chunk of the benefit, especially on the profitability side, Santo, has come from the fact that the rupee has appreciated quite significantly against the yen, and therefore the royalty payments and all that Maruti has to pay, that itself was quite lower, and that aided the earnings quite significantly. I don't think that will sustain in the December quarter. I don't see that benefit being at the same quantum that we have seen in the September quarter.
Nothing can sustain forever, my
friend. Absolutely. And overall also this quarter itself, the last month at least, the September month at least, benefited from the festive period demand, and therefore I think that will something that will go away in the subsequent quarters, and therefore we will have to even before, when auto stocks had started to rally, you and I had talked about this fact that whether volume sustain after November or after October would be a key test of where the automobile industry stands at this point of time. So I think we will have to wait and see whether this demand pull that we are seeing at this point of time for Maruti, that sustains beyond November. And lastly, they have benefited a lot from the cost reduction efforts that they have taken. I mean, a big chunk of the margin improvement that you are seeing is because of the cost reduction efforts that the company has seen. Employee costs have fallen almost 4 basis points on a year-on-year basis. So clearly, the company is taking steps to improve its margins, but there is only so much dividend from those sort of steps, Santo. And I think going ahead, pricing also will have to improve. And if demand holds up, then it's great. But if demand does not, then it's a double whammy for the company.
Well, and with that, let's take a quick look at how the market is doing at this point. Good comeback by the Nifty and Sensex once again. The Nifty is now up by close to about 40 points. CJ, there's an interesting report in the Business Standard today. So while SIP inflows have been fairly robust, right, at 12,000 crore plus, there's been a good amount of redemptions also in the past few quarters. So in fact, the net SIP inflows is just about half that amount.
No, that is true, Santo. But I think that report also talked about the fact that a lot of it is because of festive period, and generally you tend to see this sort of increase in redemption on the SIP during festive period, which actually for me is a concerning bit, not from market perspective, but from investment habit or behavior perspective, because generally the industry sells you SIP in the hope and in the belief that it is going to create long-term investment habits, right? That is the entire purpose of having an SIP. But if individuals are utilizing SIP investments to buy cars and iPhones and mobile phones on festive period, I think that is something that a market would, investors in general should be a little wary of, because you lose out on a lot of your opportunity cost is basically the years for which that money could not continue to make money for you. If, say, for example, this was a 5-year SIP or a 3-year SIP, your opportunity cost can be quite high, and I think that is where, from an investment behavior point of view, it seems to be a little concerning to me.
Well, CJ, I have a different perspective of that. This again comes from a bit of experience, I would say. Now, last 2 years returns have been really fantastic. Now it's very difficult that this kind of returns can sustain. You know, typically when you look at it over a period of 5 to 10 years, there are also periods when the NAV comes up very sharply, markets go into a downturn, and then probably you are just wondering. Of course, the mutual fund will always tell you that, right, when prices are down, you can buy more of the units. Well, that's one way of looking at it. But when there are decent profits, there's no harm in spending some of it. You see,
that is also
there's
true.
no harm in spreading some of the cheer, and I would think that there's nothing really wrong with that. In fact, I would encourage people to do that. If you're sitting on really huge profits, at some point you should take some money off the table and spend it.
True. I mean, I think, as they say, it's difficult to time your exit from the market or time your exit from an investment than to actually time your entry. That's it, Santo. A lot of questions coming in for us. I think I'd like to take this one from Smriti Farsi, and I'm sure Smriti, you can understand that we do not do recommendations, but what all that we can do is share our thoughts. And Santo, she has asked you in particular that should I dump delivery, is going down as a falling knife, investment period is 1 year and largely a growth portfolio, put significant amount, so please suggest if I can move money to Paytm or Nykaa.
Well, again, CJ just said that we can't really recommend on strategies, but this is what my argument against the stock always has been. CJ here has a slightly more rosy view of that stock, so he will give you the pro side of it. My concern is that the valuation of delivery always has been an issue. You know, it is worth almost the entire listed space in the logistics segment. That is unusually high. There's an unusually expensive valuation, and that said, you know, the growth numbers have not really lived up to market expectations so far, and now the guidance is also not all that encouraging either. So that said, it's hard to see how the stock will do well in the near term. CJ?
Yeah, clearly, I think, Santo, in the near term, the stock is going to suffer, especially because those supplies of shares that are supposed to come next month, I think that will put a lot of pressure, because let's not forget, pre-IPO investors have made chunk of money on the stock after its listing. Even though it is down about 50%, they are still sitting on hefty amount of profits, and they will naturally want to take some, book some profits, because they also have investors to tend to who are awaiting returns. But I think if you look at the longer term theme, there is a reason why delivery almost rose 100% after its listing, right? That is because investors did believe that the long term growth story remains quite strong. And therefore, much like in the case, much like is the case with Nykaa as well. If you look at Nykaa as well, the argument fundamentally are not that weak. I mean, Paytm, yes, there is an argument fundamentally that you can make that there is weakness there as far as the fundamentals are concerned. But in terms of Nykaa, in terms of delivery, the fundamental argument is still quite strong, and that is why you have not seen any sort of brokerages come out and sharply downgrade earnings expectations or anything. Yes, the FY23 volume growth expectations have been lowered. That is a different deal altogether. But if you look at a 10-year trajectory, none of the brokerages have come out so far and sharply downgraded their views, Santo. Well, Santo, another question or view basically coming out from Mitesh Rane. He wanted to know your thoughts on SBI card for long term.
Well, again, I've been slightly negative on SBI cards in general, but again, please don't take this as a recommendation. CJ here again will tell you the brighter side of the company. My argument against SBI card always has been that in this era of BNPL, and which really appeals to the youth segment, credit card companies really have some tough bit of selling to do. That apart from the fact that it's a very fiercely competitive market, but again, credit to SBI card, it has managed to hold on to its market share, and overall credit card spending has also been on the rise. But somehow, CJ, I think this is an industry where there are longer term concerns, especially RBI stance on this merchant discount rate, which is a key source of
very intensely competitive industry. I mean,
yeah,
it's not only about in the MDRs and the regulatory issues, but I think competition as well is heating up in that space segment, and it will be very interesting to see whether SBI can fight off. The belief is on the street that it can, eventually it can, but at this point of time, I think it's a little difficult to say which way the stock will lean.
It is like a kind of a strategic bet where at a certain level, when the price falls very sharply, market tends to see value, but again at higher levels, it fails to sustain. That's been the trend in the last.
Well, Santo, last question from Maheshwar Banu, and He wants to know the outlook on Gland Pharma after the result. Is it a buy now for the long term? Well, Maheshwar, if you look at the earnings, clearly the earnings were quite weak and surprisingly weak. It took everybody by surprise in terms of the deterioration we have seen in their bottom line as well as the margins as well. So clearly, the earnings momentum is not in the favor of Gland Pharma at this point of time. But there is another risk that is now developing for Gland Pharma, and that is related to its promoter Santo, because recently Forbes came out with a report suggesting that Fosun Pharmaceutical, which is the eventual beneficiary of Gland Pharma, their owner or founder, who is a big-time Chinese billionaire, he has been on a fire sale of his assets now. So that has resulted in fears whether Gland Pharma could also be next on the line as far as selling of assets is concerned, because at this point of time we know the purge against Chinese billionaires, tech billionaires and investors has been very, very strong, and with the reappointment of Xi Jinping as the president for a third term, that has accelerated those fears even more. So I think there is a lot of overhang, a lot of uncertainty around Gland Pharma at this point of time, and therefore any sort of venture seems to be a little risky.
Well, and with that, it's a wrap on this edition.
But before we wrap, Santo, we need to tell them what to watch out for.
Oh, I thought I just missed that. Sorry.
No issue. That said, see, I mean, of course, it's an event. It's going to be an event-heavy week, Santo, next week. So we have our work cut out. We have the U.S. Federal Reserve's monetary policy, outcome or statement coming out on November the 3rd. We, of course, also have the RBI's additional monetary policy meeting on the next following day as well. Apart from that, you have a lot of economic data coming out. China's PMI manufacturing data, US PMI manufacturing data, European Union's October inflation data. So these will be the three major data points to watch out for. And apart from that, of course, the earnings season will be entering its last few weeks. So HDFC, Tata Steel, Hero MotoCorp, Nykaa are some of the big names that will be reporting their Q2 results, and therefore I think we ought to watch out for those as well.
Well, and with that we wrap up this. Finally, we wrap up this edition of Market with Santo and CJ. Thanks for watching, and I hope you have a wonderful weekend. Please do also remember to post your feedback in the comment section below, and if there are any questions, please do feel free to ask them.
And as usual, guys, you can keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll see you again Monday morning at 9 a.m. Till then, have a great weekend and a rest of the day.